Okay, again, Happy New Year to all of you. So let's make some money. Let's learn something new today. Okay. In the previous class, we discussed about moving averages, right? And just to revise everything, whatever we discussed in the previous class, let's take 5 minutes and revise everything, whatever we discussed, right? So first and foremost, indicators are not a strategy. Okay, that we have that I have already mentioned in the previous class. Okay. So in any kind of a trading setup, we have two things, a strategy and an indicator. Okay. So moving average is an indicator, right? So of course, you don't buy or don't sell just by using an indicator. Okay. You should buy and sell based on setup or strategy, you can say. Okay. On a strategy, but not on indicators. Indicators are here for us to give us some information which we can't see from our naked eyes, right? So even on the chart, if you go, okay, I mean, of course, we can see the market is moving down, okay, small things, but again, there is some things which we can't see from our naked eyes, right? And indicators help us to understand those things. That's it. Okay. There are two moving averages which is important for us mostly. 20-day moving average and 20-week moving average. Okay. 20-day moving average has two things. 20 is basically the length and day is basically the time interval. Okay, or time frame, whatever you can say. Both same things. Okay. 20-day is useful for traders. 20-week is useful for both traders and investors. Okay. And 200-week moving average is useful only for investors. Okay. Now, what kind of information moving average provide us? What kind of? So moving average, they provide us or they tell us what is the sentiment of the market. Okay. So if the market is bullish or bearish, so this moving averages, they explain or they tell us that what is important. Okay. And what other people are also thinking about the market. That is also important. Okay. So if other people are bullish, then of course we have to take a long position. If they are bearish, then we have to take a short position. And sometimes, if we are confused, then we have to take no trades. Okay. Not taking a trade is also a decision. Okay. It is as much as important as taking a trade. Okay. So it's not like you are not going to take a trade. That means you are not participating in the game. You are participating in the game just by not taking entry position. Okay. It's always better to not take a trade when you are confused. So of course, so what I explained in the previous class is basically if we are in the second or third market phase and the price of Bitcoin is greater than 20-day moving average, then we have to take a long position. Again, if we are in the second or the third phase, if the price is less than 20-day moving average, then we have to take no trades, right? Why? Because second or third phase is saying the market will move up, but the price or the moving average is saying that the sentiment is negative, and both things are opposite to each other. And that's why we are not taking any kind of trade. Okay. Then fourth phase, the market is moving down and the price is greater than 20-day moving average. Again, no trade. Why? Because both the things are opposite. Fourth phase, price is less than 20-day moving average, short position. Why? Because both the things are telling us that the market will drop down. Okay. Then first phase, when the market is moving sideways. Now see, if the market is in the first phase, that means there is a 50-50 probability, 50% probability that the market will move up, and again the 50% probability that the market will move down. So both things are cancelling each other out. Okay. So there is no need for this thing, right? But we can give weightage to this part, to the sentiment part, right? So in this case, of course, if the price is greater than 20-day moving average, then we can take long position, right? And if the price is less than 20-day moving average, then we can take short position. This is what we have discussed in the previous class. It is very important. Okay? Very, very important. Great. Now today we will talk about, let's see, what's the topic? I think it's base breaking strategy. It is something different. Yeah. So today we will talk about base breaking strategy. Okay. It is something different. Okay, it's very different, and I like this strategy because when I started trading, when I was, I think in 2015 or 16, when I started trading, like when I did not know about support and resistance or trend lines or the things that we discuss in the classes, I did not know about all those things. What I know was just base breaking strategy. Okay, so when I know nothing about trading, I relied on base breaking strategy. That's why this strategy is very important for me. Because of my experience, but still, if you can execute this strategy in a proper way, that means you understand what you are doing, you understand how the market works, and most importantly, you have control on your emotions. You're in control of your emotions if you can execute base breaking strategy perfectly. Okay, that means if you can execute base breaking strategy perfectly, that means you understand how the system works, you understand how the panic works or the emotion works, right? So that's why it's very important. Now, base is just base breaking strategy. Okay, it simply means that we will first find out some few bases, right? And then we will wait for the market to break the base. Okay? The name itself says base breaking strategy, right? And that's the overall strategy. Okay. Now, what is a base? Okay. A base is a zone from where the market moves in the upward direction in a very simple way. So, for example, the market goes down and then it moves up. So, this is a base. That's it. In very simple words, this is a base. Okay. So, for example, see something like this. Okay, then this I can call this as a base, I can call this also as a base, I can call this also as a base, right? And if the market is moving sideways, for example, something like this, then of course this is basis, right? A base is a zone from where the market moves in the upward direction. Okay, like this is a very good example of base. Okay, on if I want to show you it on a chart, then yeah, you can count this as a base. See, a very good base. Why? Because the market moves up from here. Okay, this is how a base looks like. It's a percentage of what? It's a 24%, 25% move. But if you can see a 20% move from the base, then you can say that okay, this looks like a proper base. Okay, that is actually a proper base. On any chart, you will find bases. It's not just this one. This has a base. See, market moves up. This is also a very good base. 2 times actually. Okay, so that's a very good base. Correct. So this is what we can call as a base. This strategy is a little bit different than whatever we have studied before. Okay, but a unique one, a good one. So that's a base. Now, what is not a base? Now, see, for example, okay, one more thing. You can say, but Yash, this looks like a support. Why you are calling it a base? This looks like a support. Okay, this thing looks like a support. Why you are calling it as a base? Okay, but there is a difference. There is a difference between a base and a support. Okay, they look same, almost they are like identical twins. Okay, they're almost same. But as I said, I knew this strategy way before, when I did not even know about support and resistance. So for me, it was making sense. Okay, yeah. So now let's say this is one thing. Okay, and this is another thing. So this is something like this. So this is okay. So here's what happened. The market went down and then it moved up. Okay. Here what happened? The market went down, goes sideways and goes down again. Okay. So see, I can call this as a support, correct? Okay. I can call this also as a support because the market went down and moved sideways. So I can of course call this as support. Okay, but can I call this as a base? No, I can't call this as a base, right? So all the bases are a support. All the bases can be support, but all the supports, they can't be bases, right? So I mean, all the bases, whatever you are going to draw on the chart, you can call it as a support also, but all the supports are not bases. Okay? This is very important difference here. So they are almost identical, almost identical. Okay, almost. Okay, yeah. Okay, I think I have to create a new file now. 1 second. Let me just create a new file for you guys. I think you already have the link of this particular Jamboard file. Okay. If not, then I will of course share it with you once again. No problem. Two, right? Okay, great. And let me share the link of this particular one first, so everyone has it. I'm sharing it in the chat and also in the Telegram group. But where is the Telegram group? Okay, 1 second. Yeah, it's right here. Okay, I have shared it in the chat and also in the Telegram group. Please copy it from there. Okay, because I don't think we are going to use this particular file again. Okay, it's already covered. Okay. So as I was saying, there's almost, I mean, all the bases are support, but all the supports are not bases. Okay, great. Now see which base to play. For example, this is a chart, right? Okay. Now in this we have different bases, right? This is also a base, this is also a base, this is also a base, correct? But which base to play? Which base to use? So it's very simple. You always use the latest base, the current base. Okay, the latest base you use. That's it. Okay. What I am saying again, you always use the latest base. For example, if I go on chart for this one, so I can draw many bases, of course. So I mean, this is also a base. See, this is also a good base. It looks like this is also a good base. It looks like it. But if you want to play the base, then you always play the latest base. Okay, so this is the latest base. So that's why I'm going to use this one. Correct? Okay. So you always use the latest base to play with. For example, if the market drops and then it comes back again, so now this is a new base. Okay, and the previous base are disqualified basically. Okay? You can't use the previous base. This is the new base. Okay, or for example, the market goes up and creates a new base again, then now this is a new base. If it goes down again, then this is a new base. Okay, so you always play the latest base. Okay. Okay, great. Now we know what is a base. We know the difference between base and support, and we know which base to play. Correct? Now let's go to the second part, which is breaking. So this is my base. So now what we have to do is we have to wait. And that's why this strategy is very good. It teaches you patience. Okay, you have to wait for the market to break, because market, see, when you look at a bull market, you always think the market is just going to go in the upper direction for always. Okay, for all the time. But market always move in a wave. It moves up and then it drops. It moves up and then it drops. Okay, so here what you have to do now? Here you have to wait. So what will happen? The market will move something like this. Okay, and slowly the market will break this particular base. Okay, and once the base is broken, then what will happen? Then you will see the real panic in the market. Then you will see boom. everyone starts selling. This is the real panic. Once a base is broken, or you can say once a support, a good enough support is broken, then the real panic starts. Okay, all the retail traders, all of them, 80% of in the crypto market, one thing is very clear: 80% of the traders who are trading in crypto market, they have no knowledge about trading. They are just here. They are just, they are basically servant of their emotions. Okay, 80% of the people who are trading in cryptocurrency market have no knowledge about trading. They have no control of their emotions. Okay, so when they see this kind of thing, what happened? They start selling. So this is all panic, and this is what we can say. Of course, for us, this area is going to be our buy zone. I don't know who said it, but someone said it. If there is a blood on the street, you buy the blood. Okay, it basically means when everyone is selling, you purchase, you buy. Okay. So everyone is selling in this area, and we are going to the person who are going to purchase. Okay, in the panic, when everyone is panicking, we are the one who is buying. Okay, now how to buy, that we will discuss later, but just understand in this area, in this zone, we are going to purchase. Okay, so now what will happen? See, after the panic ends, slowly everyone will gather their emotions and the market will move up till to the base, till to the previous base. Okay, and right around here, just below the base, of course, not on it, but just below the base, this is the best area to sell. This particular strategy is only for long position. Okay, this is not for short position. You can use a 1 hour chart for it or 4 hour chart. Both are good. Okay, but this is only for long position, not for short position. In some countries, exchange does not provide leverage. Okay, so for those guys, they can't take short position. So this becomes a very good strategy to make profit. So yeah, so of course you have to sell when the market goes up again and to the previous base. Okay, that's where we are going to sell. Okay, now of course we already understand the buying zone, but how to buy? Okay, how to buy? Okay, it's very simple. For example, let's say if you have $1,000. Okay, if you have $1,000, then what you have to do is you have to make layer, dollar cost averaging. If someone understand what it means, dollar cost averaging, what you are going to do, that kind of thing. Okay. So what I can do is I can divide my $1,000 into 20 layers. Okay, 20 layers of $50, let's say 20 layers of $50. Okay, so then I have like so many layers: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and so many layers, right? That means I am going to use each layer as the market drops more and more. Okay, for example, what I mean by that is basically, let's say if the market drops, generally I wait for 7%. So if the market drops by 7%, okay, then I'm going to use my first buy layer. So then I will buy $50 worth of, if I have a $1,000 account. If you have, let's say if you have a $10,000 account, that's a different case. Okay, but yeah, so I buy right here on here. Okay, and then I will wait. I hope that the market drops more. If the market drops more, again 7% after that, great, I will buy back more by using second layer. Okay, or maybe the third layer also, or maybe the fourth layer also, or the fifth layer also. Who knows how much the market can go down, right? And what happens here is basically, as I'm buying lower and lower, my average buying price of this particular token or this particular coin is somewhere sitting right here. It becomes my average. Okay, and as the market goes up, then what we have to do? We have to sell everything at this point. Okay, right now just stick with everything. Of course, I will tell you how you can make more money by using this strategy. Okay, but let's say you bought your average price is somewhere in this area. Okay, you put 3 buy layers and you have to sell. Once the market moves up, you have to sell at the previous base. Okay, and the difference is going to be your profit, of course. This is your profit. Okay, now this is a base breaking strategy. In very simple words, this is what we call a base breaking strategy. Okay, what we do is basically first we identify a base, then we patiently wait for the market to break the base, then the panic starts. Okay, so we, of course, we want others to panic, so everyone will panicking and we are the one who are going to purchase. So we put our first buy layer, second buy layer, third buy layer, maybe fourth buy layer, right? And once the market takes a U-turn, then we will sell to the base price. Okay, again. Okay, and the difference is going to be our profit. Very simple thing. Okay, now we have two variables in this case. The first variable is the percentage. You can wait for the 7% drop, or maybe the 10% drop, or maybe even 5% drop. It's up to you. Okay, but 7% is a good enough percentage. I usually wait for 7 or 10, something like that, depending on the chart. You can also use 5%. That also works. Okay, if you want to purchase more, or if you have more buy layers, then you can also use 5% chart. Okay, this strategy works 90% of the time. 90% time this strategy works. Okay, I mean, the previous strategy that we discussed, they have a probability of 55 or 60%, but this strategy has a probability of almost 90%. Okay, so the first variable is, of course, percentage, as I said. So you can use 7%, 10%, 15%, 5%. It's up to you. I suggest you to be somewhere between 5 to 10%. That is good enough. Okay. Now the second thing is this buying pattern. Okay, now I can use this my $1,000 by creating 20 layers, or for example, let's say I have $1,000. Now few things I can do. I can make 10 layers of $100, correct? Or I can make 20 layers of $50, correct? Or if you want to play aggressive, you can make a layer of $200 and just 5 layers. Okay, it's up to you. Do not go less than 5. Less than 5 is not recommended. At least you should have 5 layers. And if you have less number of layers, that means you have to increase the percentage here. So if you are thinking that, okay, I want to use 5 layers, okay, then at least make sure that you have 10% drop. After 10%, buy. Okay, but not before that. After 10, because market can only go like what? 50% down. Eventually it has to move up. Right? 50% is a very big percentage. Okay, generally the market drops like 25, 30%. That's it. Okay. But yeah, so you can change the layers also. I suggest you to, this is your basically domain. From 5 to 20 layers, that's it. From 5 to 10 is also good enough. Okay, somewhere between 7 or 8 layers is a good layer. Okay. Also, there is one more way to purchase. Okay, see, as the market drops, okay, for example, the market is dropping, correct? As the market drops, you put more money on the line. Okay, because if the market is dropping, at the lower area of the drop, there is a very high chance the market might take a U-turn. Correct? So what you can do is you can put, let's say you have $1,000, okay, and this is the layer. So what you can do is you can make one layer of $100. The second layer is going to be of $200. The third layer is going to be of $300. Okay, the last layer is going to be of maybe $500. The mathematics doesn't make sense here. So $400. The last is $400. Okay, this is a hypothetical example. You don't have to use this one. Okay, just I'm explaining it to you. That's why I'm using a hypothetical example here. So what I'm trying to say is that as the market drops, then you put $100 layer first. Then if it drops more, you put this line $200 more. Then if it drops more, then the third one, $300. Now what happens in this case? The average price of purchasing is close to the bottom. It's close to the bottom. See, okay, the average price is going to be somewhere right around here, very near at the bottom. Okay, so in that case, what you are doing is you are making more profit. You can increase your profit just by putting more money on the line as the market drops more. Okay, but in that case, also wait for 10%. 7% is for medium thing, but 10% if you are playing aggressive. And of course, this is an aggressive thing. This is aggressive part. And this is also aggressive part. This is simpler things, middle average, nothing to be worried about. But these two things are aggressive. Okay. So first way of doing thing is basically buy using the same buy layers as the market drops. The second thing is, of course, you can play aggressive, make just 5 layers and use it. The third thing is, of course, as the market drops, you put more money on the line. Okay. Now, how I use it. Let me tell you how. I do use it sometimes, not that much, but this is how I used to use it. Okay. So what I used to do is basically, let's say this is base, market drops. Okay. There is a panic, and the market moves up. Okay. So what I do is I used to do just five layers. Okay. I like to. I used this strategy for 2 straight years. So 5 layers I use. Okay, so for example, if I have $1,000 account, I just created 5 layers of $200. 1, 2, 3, 4, and 5. Okay. As the market drops 10%, I buy using first layer. Again, if it drops 10%, then again I use the second layer. Again, it drops 10% more than the third layer. Okay. Generally, till fourth layer, everything is over. I think I never used fifth layer. Okay. And once the market takes a U-turn, then what I do, let's say I made a profit in this case of 30%. 30% is a good. Let's say I made a profit of 30% profit. Okay. Just explaining you. Okay, so what I do is now my $1,000. Let's say if I use all of it, let's say now my $1,000 becomes what? 1,300. Correct? 30% profit including. Now it becomes 1,300. Okay. So what I do here is basically I just sell 1,000 worth of tokens at the base. What I do is I just sell 1,000 worth of tokens at the base. Okay, so whatever I have invested in, it's already out. Okay, and everything else is just pure profit. Okay, and if I think that this coin can easily go up, okay, it can easily go up. So the remaining 30% that I have, I started selling once the market moves up. So maybe here or here, right? Something like this. So in that way, what I can do is basically I can convert this 30% profit easily into a 50% profit, right? Without putting anything on the line. Okay, because my $1,000 is already out. I can take a new trade. Okay, the remaining 30% that I had, I can convert it into 50% profit also, right? So this is something which you can also do. Okay, or you can also use the same strategy for collecting coins. For example, let me show you. For example, this case. Okay, let's use this case. Okay, it's a very simple thing. Base, we already have a base here, right? See, this is a base I've already drawn. The market went down, panic. It's a very big panic, right? The market drops like what? 15% from here. Okay, that means at least 2 buy layers I can use. So let's say one is here and the other is right here. 2 buy layers. Okay, now once the market goes back to the previous base, you have to sell. This is what I just showed you, right? You have to sell right here. You made a profit of at least the drop was like what, 15%. So at least if you think you somewhere in the middle, you made a profit of 12%. Okay, let's say if you're using $1,000, your $1,000 now turned into 1,100. Okay, 100 profit. Okay, now the remaining you can just keep. You can sell 1,000 worth of coins right here. And what if the market goes up in the future? Because see, if you look at the chart, any kind of chart, even this chart, right? Ocean chart. You see, it went up to $1.9. Right now, it's around less than 0.4. Yeah. So if this coin goes up right here, then the coins that you have collected in this area, you can easily sell it in the future. So you can easily convert that 10% profit into 3 times of it. Okay. That means you have also traded, you have also invested in the market. It's something which is a little bit, it's not by the standard of trading, but if you really want to make profit and if you have a limited amount, then you can use this strategy. Okay. Because your initial amount is already out and you can play a next trade, but your profit that you have in terms of coins, that can be doubled or tripled or maybe 5 times. You can do that in the future if you don't book it now and wait for the future. So I used to do this strategy. Okay, I used to use this particular strategy on many coins, like Chainlink is one of them. I used to do on Chainlink. I did make good amount of profits just by using this strategy all over here. See, in this area, I used to do this all things right here. And base breaking strategy is everywhere. You can use it on every chart. For example, this one, see, base got broken. This is not a small percentage, this is a big percentage. It's like 26%, 27% drop. Market dropped, you buy, and then you sell. So you purchase, and then you sell. Great. Profit booked. Again, a new base, drop. So you buy, and then you sell. Right? Whatever you have collected, whatever coins you have collected, just wait for the market to move. What will happen? Boom. The market moved up. You can start selling those coins. Start selling right here, maybe right here, maybe right here. It's up to you. But the profits that you have made here, let's say if you made 20% profit, you can easily convert that 20% profit into 3 times of it or 4 times of it, right? Just by delaying or just not booking the profit right now and book it for the later stage. Just by doing that, you can make a good amount of profit. And even right now, if you look, it's the same thing is working. See, I can easily draw a base, right? Even this is a base, right? The market panicked 2 times. So you buy, you sell. Again, the market drops. So you buy, and then you sell. Because the same base, this is the same base, right? Right. So you can have taken 2 trades at a time. Okay. So this is what we call a base breaking strategy. Okay. It's a little bit different. How will you know what percentage drop it is? Okay. Would you have to calculate it or it's automatically given? Sasa, see, generally the market drops like less than 30%. 30% is like the maximum. Okay. Now, if you want to calculate, then you can use a tool on the left hand side. There is a tool called measure, or if you just use a shift plus click on the chart, it will show you. So you can calculate percentage by using this one. Okay, this option, there's a tool for it, so you can use that one. Okay, how would one know what percentage drop it is? Yeah, you have to calculate it, of course. Would you have to calculate it, and it's not automatically given. There is a tool for it, and you can use that tool for the calculating the percentage. Very good question. But yeah, so the market generally drops. I think around 30% is the limit. But if it goes more down, then that's why I said you must have at least 5 layer. At least 5 layer. So we have to set a limit order in the layers. Yes, absolutely correct. So this kind of trades, you have to prepare for it. Okay, they can come while you are sleeping. Okay, so what you can do is you can create a base. So in this case, for example, in the case of Gala, okay, now you know that, okay, this is a base. So what you can do, just put limit orders and wait for the market to drop. If the market drops, your limit order will automatically get filled. You will automatically get notifications on your mobile phone. And once the market gets back to the same level, exit. Very simple kind of thing. Anyone can do it, I believe. And this strategy is almost like it's 90% true. Okay. Now one more thing. But you can say, but Yash, what if the market does not come to the base? What if? Of course, that is a 10% probability and it can happen. So if the market drops, okay, and if it does not go back to the same level, okay, what it will do is something like this. I know this part because I have experienced this situation. So, for example, this happens, the market drops, panic, and the market moves up again. Okay. Now, let's say you bought here, you bought here, and you bought here. Okay, so now your average is somewhere in the bottom, somewhere in the right here. Let's say, okay. And the market did not touch the base. It did not go up to the base. So what will happen? It will move up and then it will drop. Correct? So in this case, what you have to do is this case, either you can book your profit as soon as possible. So you can sell right here if you see that the market is dropping, or maybe here, or just put a stop loss. Okay, after doing everything, just put a stop loss at the price, at the average price. Okay, at the average price. So if the market drops to that level again, where a stop loss will trigger, and you won't, I mean, of course, you won't make any profit, but you won't be losing anything. Yeah. So in this way, you can save yourself. But after completing the purchase, then only you can put the stop loss. And once the market is above that level, then only you can purchase. Okay. So in this way, you can secure your amount. Okay. And it does happen. I mean, of course, if you play on a wrong chart, then this kind of situation can arrive. Okay. Maybe the market might not go up to the base level. Okay. So that's why you can just put a stop loss in that case. Any question, please drop your questions in the chat and I will, of course, take it. This is base breaking strategy. Examples, of course, let's see if we can find some examples or not. This is a good example. This is what, how many percentage? That's a 23% move. Great. We can call it as a base. Base is small movement. That's a movement of what? Almost 7%, 7-8%. Okay. So just buy, sell, done. Profit of 7-8%. Great. So can use on spot trading. Yes. Yes. The beauty of this strategy is very simple. That you can use this strategy even on spot trading. You don't have to create a futures account. You don't need leverage. You don't need other options, right? You can just play it on any exchange. On any exchange, you can play this particular strategy. Okay. See this one. That's a very clear base, right? Boom. That's a very clear base. And the panic you see, that's a good profit. That's a drop of 21%, almost 21%. Right? So you can just buy, and sell. Okay, and now you see what happened next. The market did went up. The market did went up, right? In here also the market went up, right? So let's say, for example, here if you have made a profit of, on an average, let's say the profit of what, 20%. Instead of selling right here, you can wait and you can sell right here, or maybe here, right? Just a little bit more percentage of profit. You can convert that 20% into 40%, 45%, something like that. Okay. So this we can do. And that is the beauty of base breaking strategy. It's very simple. And one thing, let me share something with you. I don't know if I have it or not. Just 1 second. Let me see if I can find it for you guys. Just 1 second. This one. I mean, I have a document or something like that. In that, it's very clearly written, like how to use a proper base breaking strategy. Okay. If I find, then of course I will share it with you. I don't know where it is. It must be. No, it's not here. So it's. 1 second. I think there is something which I can share with you guys. No worries. I will of course share it with you if I find the document. I think I have it, but I can't find it right now. But yeah, no worries. I will share it with you. Okay, if I find. But yeah, this is all about base breaking strategy. It's a very good strategy. Okay, so please do some homework on it. Draw some bases. See what I'm. See, at least see whatever you are understanding, right? At least check if I am doing the right thing or not, or if I am teaching you the correct stuff or not. At least check that. Okay. So even if you are checking what I am teaching you, you will eventually learn. That's a practice itself, correct? But at least check whatever I can teach you many things, right? But you have to check it yourself, that if it's working for you or not. Because to become a successful trader, you don't have to learn everything. You just have to learn one or two strategy. That's it. Okay, that's it. And you can make good money, at least living on that particular strategy. Okay, we got a message. I think more questions will arise when we start practicing. You should start practicing actually, because now you have understood almost. I mean, we have already covered the basic part. We have already ended into the intermediate part now. So you should start trading, start taking trades. There is no way. I mean, it's not like you will. I mean, it's not like once the course is complete, then you will start. Okay, start trading. Okay, draw support and resistance, draw trend lines, use moving average. Okay, now you also know about base breaking strategy. Use it, take a trades. Okay, don't wait for the course to complete. Okay, so yeah, that is base breaking strategy. Can you repeat what the Jamboard is for? Miss that one. What the Jamboard is for? This one. This one, Sasa. This Jamboard or the other one, the previous one. Let me know what you mean by that. Okay, guys, we have 16. We have 15 minutes left. Let me know whatever you want to discuss, please. If you want to revise any topic, let me know that, because after this, the next topic. Okay, the next topic is going to be Fibonacci. Okay, of course, we can talk about Fibonacci. I clicked on the link that you have sent, then app showed up. Okay, yeah. The Jamboard, see, whatever I'm drawing, actually, I have shared with you. The link that I have shared in the chat is the Jamboard link. Okay, so you can see what we have studied till now and you can revise it. That's why I send or share that particular link with you. Okay. Yeah. If you guys have no questions, then of course we can just continue and we can talk about Fibonacci. Now, Fibonacci is a very interesting thing. Okay. It's very interesting. 1 second, let me find Fibonacci where it is. Okay. Base breaking strategy. See, this is something which I am trying to try. Base, buying area, sell. And I also have few examples. So let's see that. Yeah, see, base, buy zone. So you buy. Okay, and then you sell. Okay. then now this becomes the retest base, okay, and this becomes the buy zone below the base. This becomes the buy zone, and then the market moves up, then you sell again. Okay, so this is something like that. Then few more examples. Yeah, same logic, same area. So you buy, sell, you buy, you sell. Okay, it's very simple, and anyone can do it. Okay, anyone can do it. Just you have to put limit orders. That's it. You see this one, see base, you buy, sell, buy again, and sell. That's a very good A part. I mean, and you see this is when the market is around $58,000. 58,000. That's insane. Okay. 58 or 5? Yeah, 58,000, I think. Again, base on dot, and then the base is broken, so you buy, you sell, and of course you can hold a little bit more, so you can sell in the future also. And this is when the dot is around what, $40, $44. You see, this is at the peak of the bull market. Very interesting ones. Let me share this with you also. I mean, this is an example, and also let me just share it in the group also. Yeah, you can check this particular example. Okay, now let's talk about the Fibonacci. Okay, now see, we are not going to into detail into Fibonacci today. Okay, but understand this part. As a human being, we have not created mathematics. Okay, we have not created mathematics. Okay, we have discovered it. Mathematics was always there in the world. In the universe, mathematics was always there. It's just that we have created, or we have discovered a way to understand it. That's it. But we have never, we can't even say that we have created mathematics. It was always there in the world, in the whole universe, right? It's just that we have figured out a way, to understand it. Okay, that's it. And that's how Fibonacci comes. So Fibonacci series is a very simple series. So what it does is basically, if you add the previous two number in the series, then you will get the next number. So for example, in this case, if you add 0 plus 1, you will get the next number, which is 1. And then if you add 1 plus 1, then you will get the next number, which is 2. If you add 1 plus 2, then you will get the next number, which is 3. If you add 2 plus 3, then you will get the next number, which is 5. So if you add the previous two numbers, you will get the next number. Okay, this is a series. This is what we call Fibonacci series. Okay, Fibonacci series. Okay, and this Fibonacci series, this Fibonacci is everywhere in the world. Okay, if you go on images, so this Fibonacci, this is how it is looks like. Okay, if you put it in a boxes, okay, and the size of the box is just the number, then you will see this kind of spiral. Okay, and the spiral, see now the beauty of Fibonacci, it is this particular sequence or Fibonacci series, it is found in each and everything, from atom to the pellets of flower to the universe itself. Okay, to the Milky Way galaxy itself. Okay, now if I just write Fibonacci series in universe, let's say, you see it's everywhere. Even in the galaxies also it is there, even in the animals also it is there, even on the pellets also it is there, right? Even on Mona Lisa it is there. So this Fibonacci is everywhere, even on the mind, the numbers, the stairs. People do use this Fibonacci everywhere. Right? You can just look at it on the things, right? In the hurricanes, see, in the hurricanes also it is there. Okay, so Fibonacci is everywhere, even in the pyramids. You see, it's there. So Fibonacci sequence or this series is everywhere in the world. Okay, and that's why I said we have not created mathematics. We just figured out a way to understand. It was always there. Now, by using that logic that it was always there, It is a part of universe, and also as a human being, you and me, all of us are part of universe, correct? Okay. So the person who figured out the Fibonacci sequence, he said that, okay, I mean, not he basically, but I think someone created the tool out of it. What they said is basically, if Fibonacci is found out everywhere and knowingly and or unknowingly we use Fibonacci, right? Maybe that particular pattern or system, it's in our mind. Of course, it can. Of course, it can happen. As a human being, we create patterns, right? And why do we create patterns? Knowingly or unknowingly, we do create patterns. Maybe because of mathematics, and Fibonacci is one of the pattern. So maybe it's already inbuilt in our mind. So why don't we use this Fibonacci sequence and create a tool, and you can use that particular tool for trading? This is how the Fibonacci thing come into the market of trading, and it becomes Fibonacci retracement and trend-based Fibonacci extension. Two things: Fibonacci retracement and extension. Okay, not this one. This is crypto thesis. Yeah. So that we are going to learn in the next class: Fibonacci extension and Fibonacci retracement. A very good way to understand the market. It does work. But what I do is generally whenever I use this particular extension or retracement, I use it with something else. So either I can use it with support and resistance, or I can use it with a trend line. But I generally like to use it with something else. Okay, so because Fibonacci is not like always 100% accurate, correct? So that's why I use it with something else. Now, please, the chat is open for questions. If you have any question, please drop your question in the chat and I will take it from there. Okay, we have 5 minutes left. And in the next class, we will talk about Fibonacci extension, retracement, and also if we have some time, then we will also talk about indicator, which is RSI. Okay. If you have any question, guys, please let me know. Drop your questions in the chat. Today, we talked about base breaking strategy, which is very close to my heart. When I started trading, I just used this particular strategy to make money. That's why, I mean, I like that strategy because see, if you can wait for the market to panic, okay, that means you know how the emotions work. You're in control of your emotions. And if you can purchase when everyone is selling, that means you have a confidence on your system, correct? Because at this point, see, now I can clearly say, okay, the market is going to move up. But when the market is dropping, when everyone is selling, you will be thinking you are the stupid one who are purchasing it. Okay, but you have to believe in the system. You have to believe in this, in the setup. Okay. Yeah. Any question? Any question, guys? Let me just send you the link of this particular Jamboard also. So you have it. Restricted. Yes. Anyone with the link can view. Yeah. Done. And I have also sent it in the group also. Okay, great. If you don't have any questions, no worries. We can conclude this class today. I hope you enjoyed it. You found it useful. Thanks, sir. I know DCA and BCA theory. And we all know how market moved, but not how it will move. So I did understand, but we should start buying when it comes down around 7. Yes. But after the base. Okay. After the base, you should start buying. Okay. So what I'm trying to say is, for example, if I take this something like this, and I can draw this a base, right? This is my base. Okay, for example, what I'm trying to say is that if the market goes below the base, below 7% below the base, then you should start buying. Okay, and also this 7% is not a fixed percentage. You can increase that percent. You can make it up to 10% or 8%, whatever makes you comfortable. Okay, do not go below 5% and do not go above 12%, something like that. But yeah. Stanley. Thank you, Stanley. What is okay? Any question, guys? Any question? Of course. Thank you a million. Thank you very much. I mean, yeah. So thank you, everyone. I think we will have one more session in this week. I have to talk to the team actually for that. Okay. And then we will do more sessions, of course. Okay. We're still there. But yeah. Thank you for everyone. Thank you for joining. Thank you for giving me your 1 hour. I hope this 1 hour is useful for you guys. Okay. And believe me, you can start taking trades. You don't have to worry. You already understand everything almost is there. But still we have a few more topics left, at least what? We have around Fibonacci is there. I mean, from 21 to 28. Okay. So, and these topics, they will take time. I mean, RSI will take time, MACD will take time, stochastic RSI will take time. Pattern trading, it will take more time. It will take at least 2 or 3 classes. Okay, but things will take time. Okay. But yeah, thank you everyone. Thank you for joining.